All right, we're just about ready to go. We're going to do our first round of professional issues presentations today. So set up here with their minimal distraction. I am recording these videos, but it's just for reference for this class. And so just so I guess what we'll do first is we'll do the groups without slides and then the group with slides at the end. I've got them set up on screen. You just turn the camera on here. So what group are you all, Joe?
Group two.
So we'll do group one, then 3, then 4, then we'll go back to group 2. So group 1.
What?
Yeah.
Hello, everyone. My name is Ben.
I'm McKenna.
I'm Troy. I'm Cole. So for group 1, we got Thomas, and Thomas is an auditor at Wallace and Grant, and he's an auditor for Mid-States Components. So the problem with this, I'm starting with the summary. So Grant basically has a late night. No one's at the office but him. He's at the client side, and he needs to make a copy of something which is in the controller's room. So he heads to the controller's office and sees that the door is cracked. There's 2 people talking. He identifies that it's the CFO and the controller. So he decides to listen in. And the CFO is telling the controller that the company should record revenue early by issuing invoices for year-end, even though the goods have not been shipped. So the controller is hesitant with this and tries to tell him that that's not a good idea, but because it violates GAAP. But the CFO kind of shuts that down. He's like, we need to meet this bank loan covenant. So because of this, the controller finally agrees and says that they will record the questionable revenue and then potentially reverse it later. So then Thomas has to decide what to do with this information. So then the primary professional issues are improper revenue recognition. The CFO is suggesting that revenue is recorded before goods are shipped, which is a violation of GAAP. And then our other one is management's intent to manipulate financial statements to meet a bank loan covenant. This is a serious ethical issue, trying to meet requirements, which is caused by the pressure of keeping the financials up to date so they don't lose that bank loan covenant.
And then for the professional standards relevant to this, we kind of looked at it from both the client side and the auditor side. So from the client side, we looked at the FASB codification and more specifically ASC 606, which are those revenue recognition rules that I'm sure everybody's familiar with. So we have to identify our contracts, identify our price, performance obligations, allocate price to performance obligations. Thankfully, this one's pretty straightforward, right? The customer bought something and our performance obligation is to ship it. And since we have not shipped it, or since they have not shipped it rather, they can't recognize the revenue. Pretty simple to identify there. Now looking at the auditor's perspective, we have the AICPA Code of Conduct, section 1.100.001, which deals with integrity and objectivity. So from objectivity standpoint, you can't just suspend your judgment based on what the client says or what they say they're going to do. You still have to apply your own analysis. So when they say that they're going to give something a certain accounting treatment, we still have to evaluate whether that's appropriate. And then integrity is that we cannot knowingly omit or misrepresent information. So if we overhear something, even if we didn't mean to, or if it wasn't intended for us, we still have to act upon that information either way. And then finally, auditing standards 2401, which deals with the consideration of fraud in the financial statement audit. This one's kind of much more up in your face, right? Obviously, we have to consider improper revenue recognition is a major concern for fraud. That's kind of like a textbook example of what we learned from. So, if you ever had to explain to your boss or to a regulatory authority why you missed something like this, saying that you weren't aware that you're supposed to be looking out for it is just not an acceptable answer.
The next, I'm going to talk about possible actions that Thomas could have taken in this scenario. So the first one is easily the worst one. I'm not saying anything at all. There's not really any justification or any justification on why he should not say anything about the issue. The next option is immediately just interrupting the client's conversation, telling them that this is unacceptable. We feel that Thomas, as a first-year auditor, is not in the position to be having that conversation. The third option is what he kind of came to the conclusion to in the case, and that's like waiting to see if the journal entries are actually booked, and if they are, then report it to the senior. He could justify this saying that there's no need to worry at this moment because it's not technically an issue yet. But we'll talk about more why that is not an appropriate option. And then the fourth option would be immediately reporting it to your senior, even if the conversation itself was a major red flag, should make you question the ethics of the management at the company and make you worried about other issues that could be going on. And then our final option was reporting it directly to the PCOB. We believe this is an appropriate route, but it's something that should maybe be discussed later after you talk to your senior.
Yeah, so like we said, we think that he should go first directly to his senior manager, whoever the in charge is on this client, and then possibly bring the partner in after having that discussion. He should also avoid going straight to management, like we said, because that could end up tipping them off. They could try to end up covering their tracks. That's not really going to help him out right now. He should also avoid trying to go at this alone. He should definitely alert the other people on his engagement team just to get their opinions on it. Like we said, he is a first-year auditor. And just to get some other backup, just to get some other opinions in the mix. But at the end of the day, this conversation should raise a huge red flag, like we kind of said. This does show that management is considering fraud as an option. And so that should raise a huge red flag, and he should not be able to take that as face value.
So we discussed different types of fraud schemes with respect to revenue 417. Do you all remember what type of fraud scheme this represents? So we have bill and hold sales, channel stuffing, side agreements, and related party transactions.
With channel stuffing?
It's channel stuffing, yeah, it's channel stuffing. Just curious if that came across. Interesting. So your conclusion is that it would not be appropriate to stay silent. From a legal perspective, is there any contradiction to this? Like, if I was for Professor Templeton, all right, so we've got an auditor here who has information that's basically overheard in a conversation is legal or permissible or submissible in a court of law. What would he say? I honestly don't know the answer to this one. So.
Court of law, probably not permissible, but in an audit, I still think we would be able to act upon that. Yeah. Even if like we could never prove that they actually said it. Or like on guard for that kind of thing taking place.
Yeah, I think in court that could probably get shut down as hearsay, but not for sure.
Other questions? I know you have them. I made you write them down.
So do you think that if this is brought to the auditor in charge, should they address this before management has the opportunity to commit this misstatement, or should they wait until after they do so?
I mean, probably take it to those charged with governance before, like Cole mentioned. I mean, this presents like you have to look at it not from the perspective of just this isolated incident, but like what does that say about management as a whole? So there's likely a lot more going on than just this specific circumstance. And also dealing with the problem would probably be much more difficult after the misstatement has already occurred as opposed to before.
Anybody else? Good job. I'll be. For 3.
So a little summary about our case. So it's about a second-year auditor named Austin, and he was performing procedures over client's inventory balance. So he observed a portion of the year-end physical inventory count. He performed test counts, traced quantities to the inventory system, and tested costs against vendor invoices. He noted that there were some discrepancies in the inventory records. that could lead to fraudulent activity. And so he raised these concerns to the partner in charge and then kind of had disagreements with the partner, and the partner angrily asked him to drop the matter, and that higher ups had already reviewed it and everything and said it was good. So now Austin's unsure of what to do. So the issues we identified were that Austin found several inconsistencies in the quantity observed in the warehouse and the amounts that were actually recorded in the records. And then there were also several late adjustments made by the client after the physical inventory count had been made. And these late adjustments increased inventory total without any clear documentation or supporting evidence for it.
So for the guidance, we looked at it from the auditor's perspective, and we said that an argument could be made for a lot of standards, but we just focused on two. So generally accepted auditing standards are relevant to the scenario because they provide guidelines regarding the standards of work of the auditor. So the process, planning, supervision, understanding of internal controls, and most relevant to this case, how to obtain sufficient and appropriate audit evidence. GAS also governs the standards of reporting. This means how the findings are communicated and assurance that the report of the financial statements is in accordance with GAS. And then we also talked about the AICPA Code of Professional Conduct, how it's relevant to this scenario. It promotes specific guidelines on major ethical decision-making and conflicts that may arise, such as the conflict between the auditor in charge and Austin in this scenario. And we said that Austin should conduct himself in a way that aligns with the professional and ethical standards of the organization and audit field.
So for some of the courses of action that we think Austin could take, the first one is probably the least recommended, which is to follow Albert, the partner's guidance, and sign off on the work papers. Another thing you could do is reach out to a peer auditor and ask for their opinion. Another course of action they could do is continue with the inventory testing as they see fit. And the last course of action that we decided to recommend potentially is to resign from the engagement or the audit firm altogether, or even resign from the firm and report it to the correct governing body for the engagement. Ultimately, however, we decided that the best course of action was to follow professional skepticism. Trust, but verify. Albert may not necessarily be wrong that the discrepancies could be immaterial, but Austin doesn't know that for sure. He should continue with investigating into the inventory testing. Hopefully, he can keep it on the down low from Albert before Albert decides to step in and put it to an end. If Albert continues to be a problem potentially, then it may be wise to resign from the engagement from an ethical standpoint, since it would not be ethical to sign off on work papers that you were not confident are fully investigated. If Albert continues being a nuisance and you feel as though this is a big enough ethical standard, he could report this to the respective governing body and opt to continue to resign from the engagement. We decided not to go with discussing with a peer auditor just because we thought that that could potentially bring attention to the problem to other parts of the organization, and that could potentially cause some conflict with some of the other auditors on the team. So,
just for context, I completely, totally randomly assigned Austin to the group where this that was completely unintentional, but happy coincidence. So let me be completely and totally frank. All right. So it's very easy for us to make this assessment in an isolated classroom where there's no penalties, or there's basically a sanitized environment where we don't have to worry about consequences. Now, I want you to all go to your first job where you assume you're at a public accounting firm and you put an Austin situation. All right. Do you think you'd be legitimately able to do the same thing? Would you be able to call into question the partner's judgment?
probably not.
Yeah, it's really hard.
I would, but like not openly, you know?
So do you think that there's a problem? Do you think that we make too much of an issue? I'm talking about education, that we make too much of a concern saying trust the judgment of their superiors and use them for guidance. Do you think we focus way too much on that and kind of
back off too much on trusting your own judgment?
Well, I do think that, you should obviously take into account their opinion because they have more experience in the field and obviously with the engagement specifically. But at the same time, I feel like we put enough evidence in the classroom or for making ethical decisions. I think it's important you've always emphasized the importance of being ethical when you're performing an audit, and especially in fraud cases, things can easily slip under the cracks if you aren't keeping a watchful eye on it. So I do think that we are prepared enough for making those decisions. I think ultimately there is a large cost that is associated with it because obviously going against the audit partner as like a first level staff would be extremely risky for your position. So plus the job market's terrible. I don't think anyone can lose their job.
So do you think there are conflicting interests here at work? Do you think that Albert's perspective is different than Austin's perspective?
Yeah, I think so because he understands. He has a broader view of the organization as a whole, whereas a lower level auditor may only be focusing on one or two areas of the audit. So their hyper focus is on their section, and it's like, well, of course they're going to have more of a watchful eye on it, whereas the partner can say, all right, everything else is great with the audit. This not being a problem isn't important. Just go through with it. It doesn't matter. So.
Good question. All right, we're not feeling chatty today, so that's good. All right. Guessing Mary's third.
Yeah.
Yeah, I can forgive Mary given the situation she's in right now.
Question.
Did she tell you what was going on?
Yeah.
Bed bugs are the worst. I would not wish that on my worst enemy.
So we had case 4, and we had Clayton Cormier was an auditor who was engaged to audit Harbor Tech, and while testing fixed asset additions and review of lease agreements, he ran into some issues with client delays, invoice follow-ups, and needed some additional reconciliation. This caused Clayton to go over his budgeted hours for the engagement, but he also felt pressure from his manager, I believe his name was Joe, not to go over the budgeted hours. Out of fear, after hearing comments from his coworkers, Clayton decided to underreport his hours to increase his performance review. And then some of the professional issues that concern this case are due professional care. Auditors are expected to perform their duties thoroughly, and if Clayton feels pressured to meet the budget, he or others on the team might be skipping out on some of those crucial audit steps. And then due diligence and sufficient evidence. If Clayton's delays were caused by gathering necessary evidence to understand the leases, if the firm's culture discourages spending the time needed to gather the evidence, they run the risk of signing off on unsupported financial statements. And then also the tone at the top, the manager's relentless focus on budgets over audit quality has created sort of a toxic environment, and leadership should be disincentivizing rather that unethical behavior. And then we have objectivity and independence. So Clayton's objectivity is being threatened by a conflict of interest. He is allowing a personal interest, which is protecting his performance review, cloud the professional judgments regarding accurate record keeping.
So we had three possible courses of action. Option 1 was to just underreport his hours. This would avoid the immediate conflict he would have to have with his manager, talking about his overage of hours, and it kind of protects him in the short term, but in the overall, it's just unethical and it can create a problem for the firm because the budget hours for next year might not be an accurate amount. So the next auditor could also face a similar issue. Option 2, we had report the hours correctly without an explanation. This is more ethically correct and it gives the firm more accurate data without any context to like management and stuff. It just looks like he was pretty inefficient at his work, which kind of results could result in a poor performance review for himself. And then option 3 was report his hours correctly and then communicate that with management. This maintains AICPA compliance while he also does have to deal with the uncomfortable conversation, but it does demonstrate like he's doing his job with due professional care. So we said that option 3 was his best course of option. He should report his hours completely and accurately and request a meeting with his manager. He should present the manager with like supporting evidence of like why it took him more hours than he was budgeted. And this allows him to maintain his integrity, and it provides the firm with accurate data so they can properly budget for next year's audit. Yeah, that's pretty much.
So what was the colloquialism that I used in the description to describe this? This is something that you're probably going to encounter in the future. 2 words that were used to describe for reporting under budget. Does anybody remember from the case? It was in quotation marks. Don't remember. Eating time. Eating time. Yeah. And the reason this is important is because this is a big issue in accounting firms. So a little bit of background on this. When I was working in public accounting, there were multiple emails sent out by partners saying you should never underreport hours. Eating time is not allowed. All right. So problem solved, right? This is the message that was being sent to the organizations. There's also another message that was being sent by partners to management. It says, if you want to be promoted, you have to manage your engagement sufficiently effectively and come in at or under budget. Does everybody see a problem with this? To one group of individuals being reported, make sure you report your hours correctly. To another group of individuals being reported, you need to be efficient. You need to do everything you can to come in at or under budget. Now, what is the logic in reporting hours? What is the whole goal in trying to report hours correctly and properly? So we're talking about a time budget here. What's the purpose of budgeting in the first place? Right. And what is that budget going to be used for? Yeah, so assuming that we're going to do the engagement in the future, we want to know how much staffing needs to be. If it's like, if we assumed it was 300 hours in the current year and it turned out to be actually 400 hours in the future, then we can actually add more staff to adequately engage that and tell the client, we undercharged you for the previous year. We're going to have to do more work based on the nature of the engagement. Everybody's agreement that that's a representative accuracy, that would be the entire goal. And I think that at a fairly intuitive level, this is something that we should shoot for. This is something we should strive for from a perspective of just kind of rote knowledge and just rote assessment. This is what our goal would be. What is the conflict here? What is the conflict? Why are we eating time? Why are we eating time? So you have a manager who says the budget is 300 hours. I don't see how I'm ever going to get it under the 300 hours. There's no way my associates could ever accomplish that. So they can't report what they actually worked. They've got to report what is on the budget. And that's going to make me look like a good manager. So there's not necessarily an explicit statement like the manager didn't go up to Clayton and said, you only get to report 10 hours here. They said, you should only be taking 10 hours on this. I'm going to be really disappointed if you take longer than 10 hours. Now, what's Clayton's position on this one now? So the position is very, very challenging. It's very difficult to say, well, my manager says that I should only work 10 hours. So that's going straight in the face. You're lying to a partner if you do that. On the other hand, if you report more than 10 hours, what is the manager going to do in your evaluation at the end of the engagement? They're going to basically say was not effective with the use of time. It took much longer. And poor Clayton's put in a paradox, okay, which actually often happens for the person that Clayton works for right now. So that was a joke, guys. All right. So Clayton's put in a paradox is like if I report one party accurately, then I'm going to tick off another party. If I report inaccurately, then I'm basically violating what my responsibility is. This is why this is such a concern. And is there a good answer for it? The best answer would be is that management or the partners would not make this paradox created in the first place and say that budgets have to be followed to all degree, but you also have to report your time accurately. There is no practical way to accomplish both of those goals. So, that's ultimately where the concern is, and the answer is somewhere in the middle. We don't know what the answer would be. I think that it's going to be a case-to-case basis, but That's why it's kind of an interesting issue. That should have gotten the creative juices flowing. So what are some other questions you all have?
Do you think that budget limits inherently can lead to audit engagements with scope limitations?
I mean, I think yes, because like if you, well, not them inherently, because you can always just go over budget. So like it shouldn't create that scope limitation itself, but yeah,
Yeah.
Expectations.
yeah.
Kind of, but not kind of, but not completely.
Not directly. Yeah.
Do you think that budgeting sets phony expectations? So, example, on our syllabi, we're required to say that basically you're going to be spending 3 hours in class every week, but the time spent outside of class is 6 to 9 hours a week. Do you ever get ticked off when you're spending more than 9 hours working on a particular class? Do you just kind of like, this is complete and total, well, you know what I'm trying to do.
I don't know. I think it's more from like the other way around. Like some of those like public speaking, for example, like they say, oh, you'll spend, 3 hours outside of class, like doing that per week. And realistically, you probably only spend an hour, maybe 2 hours, and then you allocate your other time towards those heavier classes. So yeah, I do think that they set phony expectations.
Anybody else?
How can I avoid going over time and over budget in the future?
Oh gosh, I'm working efficiently and effective.
What are you trying to say?
I don't hope that managers don't set unrealistic budgets. I really don't.
I agree.
Good job. All right, group 2. They can just turn on the camera and just hit on the thing.
The top one.
Yeah. Should come on here in just a second.
So I'll go through the case overview. Mostly our case was about a conversation between Matt Dobbs and his audit manager and a routine like check-in, like seeing how everything is going, trying to check his progress on like CPA, like is he gonna actually try to get a CPA, like kind of where he's at. And he ended up lying to her, saying he hasn't started, even though he already took all 4 exams. Just he didn't want to be embarrassed if when the scores came out he failed. But he ended up passing all the sections 2 weeks later. And he ended up going into her office and told her, hey, I passed all my exams. And then he was thinking she was going to be really happy. And then she ended up being upset because she knew that he lied to her and he couldn't have got the scores back that fast. So this kind of pushed it all the way up to the engagement partner. And they kind of viewed the lie as a fundamental threat to his trust that's required in the audit role. Because you can't trust them to tell you if you're taking an exam, like what can you trust them with? So he was terminated immediately because of his lack of professional transparency. And the main professional issue that we went over was integrity. He kind of had a lack of integrity because that breach of trust I just talked about between Matt and his manager. They can never work together again, or most other people he works with might not want to work with him because they know he lied in the past. And the stakeholders do rely on honesty from the auditors to make sure their financial statements are free and clear of material misstatements. So if can't, yeah, but so this kind of showed the firm liked trust and reliability a lot more than his technical skills to pass the CPA exam.
Okay, so now going over the professional guidance that we found relevant, looking at the AICPA Code of Professional Conduct first, we
definitely looked at integrity, as Joe was saying earlier. This is definitely the main one in this case, but just the violation through the dishonesty with the manager and looking from the manager's perspective, their job is to have good accountants and auditors that are able to do the job for the customers. And if they can't even trust them, how are they going to be able to allow the customers to be able to trust them in those situations? And then objectivity, misleading his manager. And then looking at the generally accepted auditing standards, this is kind of looking from the job side of things, but due professional care. He wasn't doing his job, telling the truth in that perspective. So if he's in on the work site or doing an audit, how can you trust him to do his job truthfully?
So we identified 3 areas for possible courses of actions. The first was honesty. He could have been honest immediately after or immediately in the situation. He also had the chance to come clean at any time to be like, hey, this is why I lied. I know I messed up. That could mitigate some of that integrity and show that he is taking steps forward to being more honest. And also, after he was fired, there are future opportunities. He can be honest about the reasons for his terminations and show that he is making progress. There's also continuing professional education. There are tons of ethics courses that are offered for that. And so if they had kept him as an employee, they could have put him through those courses. There are also tons of ethical workshops they could have sent him to. But also he could take these classes after his termination to show that he is trying to learn from this mistake. He wants to be more ethical. He wants to grow. There's also, he can discuss and learn from mentors and peers. He can establish himself in a support system that will help with his ethical analysis and ethics, and will call him out when he makes missteps. This support system will also help him analyze what he's going through and help him understand where he went wrong and what he can do in the future.
And so for the best course of action, we thought that at the beginning, just being upfront about the situation immediately would have obviously been best. Most managers would care most about honesty other than the exam results. So Matt could have said something like, I took the exams and I'm waiting on the results. But since he didn't do that, we said once he lied, we feel that the next best decision would have been to correct it right away by saying something like, I misspoke earlier and it was a lapse of judgment, it won't happen again. And it could have cleared things up as opposed to doing what he actually did. And then as Hannah talked about in his future job interviews, being honest for the reason for his termination and how he's improved overall. And just that he's tried to better himself with respect to his integrity would be the best possible course of action. That's it.
So I know we put a lot of pressure on you all for the CPA exam, for those of you who are sitting for the CPA exam, but that's, I think that's a separate issue than what we're talking about here. Do you think that there's way too much pressure on trying to be successful in the CPA exam and that there's a stigma associated if you're not successful?
I mean, I would say so because it's a lot of pressure just to move on in public accounting, or if you want to like branch out, you can have a lot more success with having your CPA. It just opens a lot more doors. So I feel like young like workers are wanting to get to that benchmark.
I also think there's a pressure with like the amount of time that you're able to spend on it. If that's in like your first year of working in public accounting, then they kind of expect you to get that done. So it's not like dragging with you and taking time away from their work they have you doing. So
do you think that there's a trade-off? I mean, and by that, I mean, we obviously, if you pass a part of the CPA exam, you're very excited. You report it on LinkedIn, you tell your friends about it, and everybody celebrates. Do you think that there's just kind of a trade-off of unhappiness if you don't pass a particular section? Or do you think that the more rational action would be, I didn't get it this time, I'm going to get it next time. I feel confident in my ability. Do you think that that's the way that we approach things as human beings? Do human beings behave rationally is my question.
No.
No. And so is it understandable for Matt to have taken this particular course of action? Could you relate if you were put in Matt's situation?
Yeah, I mean, I could relate to it. I mean, if you're scared of like having a bad reputation with your manager, and they might think less of you if you didn't, well, thinking they'll think less of you if you didn't pass it on the first try or whatever try you're on, even though they probably went through the same situation themselves.
I agree. I think that's why the most realistic one is number two. You know, maybe accidentally being like, hey, I haven't taken them yet, and then coming back later and being like, hey, I was kind of stressed out. We'll slip up.
So something that you talked a little bit about, but tends to be a very, very big anchor in this case, is whether or not the firm was appropriate with their actions. Did anybody read that and just say, "Oh, that's ridiculous. I can't believe they fired him over something like that"? Did you all have a discussion about that and say, "Yeah, this was a complete total overreaction"?
We did a little bit and said how it's probably not the most realistic thing and they might have overreacted a little bit, but definitely a stretch to get fired over not like a white lie, but a big lie that in return could mean something. But we didn't think it was a fireable offense.
Okay. So I respect what you did because you actually analyzed the reasons why Matt was let go and discussed, look, these are the issues that face here. If you're talking about somebody who would be willing to lie about something that's genuinely so small, would they be willing to lie about something that's much larger and not be correct about that? I'm just curious, how many people in the room read the case and like said, this is outrageous. I can't believe the firm would fire somebody over this. Okay, how many people said the firm's completely justified? You notice I'm raising my hands for both. So. I think the answer is probably somewhere in the middle. It's like, I think what we would expect is, I would expect to be reprimanded and it would probably affect my career, but I can't imagine that somebody would be fired, terminated. And this is actually based on something that really happened. A little bit of context, the case that was originally written about, it was back in the 1990s when you sat for all 4 parts simultaneously. And there was this big, big stigma about being a first-time passer. If you passed it on the first try, you were just held as this hero. And being able to do that on the first try was something rare. It was like 10 to 15%. So everybody had this thing. I want to be a hero. I want to pass the first try. I just got to do it. And it was so ridiculous because there were people who passed on the first try that just went on to become complete and total slackers, okay, and never had a real career. And there were partners who basically had to take 3 or 4 tries to pass all 4 parts, or at least get through all 4 parts, and were just incredibly successful and did really, really well for themselves. This is not a signal of future success, and yet there was such an incredible pressure surrounding it. I would argue that pressure still exists to some degree, though we've kind of tempered our expectations somewhat. Any other questions? Any other rants like mine?
Do you think Matt's termination could have been avoided if he just came forth earlier and like said, "Hey, you made a mistake," or do you think they still would have fired him?
I think kind of if he would have said that, like, yeah, I misspoke, that would have been something like they definitely would have been easier on him if he just came clean earlier. But yeah, overall, we didn't think he should have been fired also. So.
Yes. Oh, sorry. Go ahead.
Do you think saying he misspoke would be like a good enough excuse? Like, do you think they'd be like, yeah, we don't buy that?
I mean, I feel like, it kind of depends on the manager, but I feel like if you come out in like a clean way, saying you're like actually sorry and like you're stressed, I feel like a good manager should be understanding, knowing that you're in a new career or starting out in the career. So sounds like they're pretty harsh here though, so I don't know.
Also probably depends on the timing that you come clean. If you wait like 3 weeks or something and tell her right before, hey, I passed them, they're not going to take that as well. But if you tell it like pretty soon after, they would take that much better.
What about so let's just take a different course of action. So this is something that's relevant to the profession, the CPA exam. What if Matt had lied about something that was completely unrelated to accounting? Like I said, I'm a former Cy Young Award winner. Yeah. Would they have reacted the same way, you think?
maybe lost a little bit of trust in them, but probably not, acted like they did, but
I asked that
a
specifically.
lie's a
after
lie.
baseball.
Yeah. Yeah, a lie's a lie though, so who knows?
Good job. All right, nice work on the presentations for round one. Guess what? We've got another round next week, so read your cases for Monday and I'll see you all then.